Florida's rental market is reaching a breaking point. Landlords across the state are facing unprecedented financial distress, with many slipping into default on their mortgages. The rental boom that once made Florida a lucrative playground for property investors is unraveling fast. The same investors zero who scooped up homes during the pandemic-era frenzy are now watching their rental incomes shrink while their expenses soar. Why? Because the rental market is shifting dramatically. Renters, once desperate for housing, now have the upper hand. Prices are dropping in major cities like Miami, Tampa, and Orlando, forcing landlords to slash rents just to keep units occupied. Meanwhile, property taxes, insurance premiums, and maintenance costs are skyrocketing, leaving landlords struggling to stay afloat. Some are unable to cover their mortgage payments, leading to rising defaults and distressed sales. For renters, this might sound like good news, but for property owners, the stakes are higher than ever. If Florida's rental market continues down this path, it could trigger a wave of foreclosures, fire sales, and a broader economic downturn in the state's real estate sectors. So what's really happening behind the scenes, and how bad could things get? Let's break down the factors pushing landlords into default. Do you think Florida's rental market is in a temporary correction, or are we on the verge of a full-blown crisis? Comment below. With these pressing financial challenges taking shape, we must examine the specific factors that are driving an increasing number of Florida's landlords toward default. Florida's rental market was once one of the hottest in the country, with double-digit rent increases becoming the norm between 2020 and 2022. Investors rushed in, eager to cash in on soaring demand. But today, the landscape is shifting fast. In cities like Miami, Tampa, and Jacksonville, rents are now dropping at an accelerated pace. According to recent market reports, rental prices in some areas have fallen by 5% to 15% year over year. In Miami, where rent skyrocketed nearly 40% in 2 years, tenants are now finding better deals as new supply floods the market. Large apartment complexes and single-family rental homes are competing for fewer tenants, leading to price cuts. What's driving this downturn? A combination of oversupply and economic shifts. Developers built aggressively during the boom, and now thousands of new rental units are hitting the market just as demand cools. At the same time, renters are financially strained by inflation and job uncertainty, making them more likely to downsize, relocate, or negotiate lower rents. For landlords, this means less rental income. Many who purchased properties at peak prices and took on high mortgage debt are now struggling to cover their costs. If they can't collect enough rent, they risk defaulting on their loans and in many cases selling at a loss. Yet, falling rents are only part of the puzzle. The mounting expenses landlords face further exacerbate an already tenuous situation. As rents decline, landlords are also facing an unprecedented surge in operational costs. One of the biggest burdens? Property insurance? Florida's insurance market is in crisis, with rates skyrocketing due to a combination of hurricane risks, legal battles, and insurer bankruptcies. Some landlords have seen their premiums double or even triple in the past 2 years. Take this example. A Miami-based landlord who was paying $3,500 per year for insurance in 2021 now faces an annual bill of $9,000 or more. For smaller landlords, this expense alone can wipe out their rental income. On top of that, property taxes continue to climb. Many investors who purchased properties at inflated prices are now seeing higher tax assessments, adding thousands to their annual costs. In some Florida counties, tax increases of 10% or more have been reported in just the past year. Maintenance and repair costs are also at an all-time high. Inflation has made everything from HVAC repairs to roofing projects significantly more expensive. A basic repair that used to cost $500 might now set a landlord back $1,000 or more. With rents declining and expenses surging, landlords are being squeezed from both ends. Some are dipping into their savings to stay afloat, but many are simply falling behind on mortgage payments, a direct path to foreclosure. Should landlords be doing more to adjust to the market, or are they simply victims of an economic downturn? Let us know your thoughts in the comment and give this video a like. As if surging bills weren't enough, another setback. longer vacancies continues to erode landlords' profit margins and push them closer to financial peril. As rental demand cools and supply increases, landlords are also struggling with longer vacancy periods. During the peak rental boom, properties were getting rented within days. Now, landlords are finding it takes weeks or even months to secure tenants. Newly constructed apartment complexes, particularly in areas like Orlando and Tampa, are offering aggressive move-in deals and incentives, making it even harder for individual landlords to compete. Some buildings are giving away 2 months of free rent just to fill units. For landlords who depend on consistent rental income to cover their mortgages, a vacant property can be disastrous. A single month without rent can turn a profitable property into a money pit. If vacancies extend to 2 or 3 months, landlords who are over-leveraged have little choice but to sell or face default. This high vacancy trend is especially severe in Florida's short-term rental market. Many Airbnb owners who once thrived on high demand are now struggling with declining bookings. With fewer tourists and increased competition, some short-term rental investors are converting back to long-term rentals, flooding the market with even more supply and driving rents down further. For many landlords, this downward spiral is unsustainable, and the result is a growing number of defaults and distressed sales. All these factors converge to reshape Florida's rental landscape, influencing both tenant opportunities and landlord hardships in profound ways. For renters, the current market shift presents a golden opportunity. Just a year ago, tenants were in bidding wars for apartments, forced to accept sky-high rents and minimal negotiating power. Now the tables have turned. With landlords desperate to fill vacancies, renters are gaining more control over lease terms, prices, and incentives. In major cities like Miami, Orlando, and Tampa, landlords who previously increased rents by double digits annually are now offering concessions just to keep tenants from leaving. Tenants now find themselves benefiting from a range of notable perks. Many landlords, pressured by growing competition, have reduced monthly rents by anywhere from 5% to 15%. Some larger apartment complexes sweeten the deal even further, offering free rent for 1 or 2 months, along with discounted security deposits to fill vacant units quickly. Meanwhile, lease agreements have become more flexible overall, granting renters the leverage to negotiate shorter terms, reduced fees, or even free parking and utilities. Additionally, renters who previously struggled with rent hikes and minimal housing options can now explore better properties in prime locations without breaking their budget. This shift in power benefits those looking to relocate or upgrade their living situation, but it also raises concerns about how sustainable these low prices will be, especially if landlords start exiting the market in large numbers. While many renters welcome these changes, landlords are bearing the brunt of the new conditions, facing unprecedented levels of debt and uncertainty. While renters are celebrating lower prices, landlords are facing some of the toughest conditions in years. For many, the financial pressure is reaching a breaking point. Landlords who bought at the market peak, 2021 to 2022, assumed rental prices would continue rising indefinitely. But now that rents are falling, many are unable to generate enough income to cover their mortgages, insurance, taxes, and maintenance costs. Landlords across Florida are grappling with serious challenges that threaten their financial stability. Foremost among these is the inability to raise rents. In the face of greater competition and a steady influx of new rental units, property owners simply cannot push prices high enough to offset their escalating costs. Compounding this problem is the issue of tenant turnover and prolonged vacancies. In an environment where units once rented within days, many landlords now find themselves contending with empty properties for months at a time, a situation that directly undercuts profits. Finally, loan repayment pressures add yet another layer of strain. Many landlords banked on rising rents to keep pace with adjustable rate mortgages or short-term loans. But as rates climb and rental income falls, meeting monthly mortgage obligations becomes increasingly difficult. Many small-scale landlords, especially mom-and-pop investors, are being hit the hardest. Unlike large corporate landlords, these individuals don't have the financial cushion to absorb months of losses. As a result, some are defaulting on their loans, selling at a loss, or even walking away from properties entirely. If this trend continues, it could lead to a wave of distressed sales, potentially affecting Florida's broader housing market. Given these mounting pressures on property owners, it becomes crucial to explore the trajectory of Florida's rental market and its potential effects on all stakeholders. So where is Florida's rental market headed? While some believe this is just a temporary market correction, others warn that it could spiral into a full-blown crisis. Experts predict that rental prices may continue to decline through 2025 as more housing supply floods the market. In cities like Miami and Tampa, thousands of new apartment units are still under construction, which will only increase competition and drive rents down further. For landlords, this means more financial distress and potential foreclosures. Some investors will likely offload their properties at a discount, leading to a buyer's market for real estate investors. Others may default on their loans, forcing banks to take over properties and resell them. If interest rates remain high, many struggling landlords will be unable to refinance, further fueling forced sales and market volatility. This shift could mark the beginning of a major reset in Florida's housing market. With a clearer vision of what may lie ahead, the next step is to consider practical strategies that could mitigate these evolving risks. With uncertainty ahead, different stakeholders can take practical steps to navigate the shifting market. For landlords and investors burdened by mortgage payments, renegotiating terms with lenders, or selling underperforming properties before prices drop further may help maintain financial stability. Diversifying income, such as by offering shorter-term leases or furnished rentals, can also alleviate rising costs. Meanwhile, renters can gain ground by negotiating aggressively, comparing listings, and waiting for the best deal. They should also pay attention to a landlord's financial health, given the increasing risk of foreclosure. Lastly, home buyers and investors should keep a close watch for distressed sales and foreclosures, as these may provide prime buying opportunities, especially once mortgage rates have stabilized. By taking proactive steps, each party can better weather the ongoing market shifts. Yet the question remains whether Florida's rental market can stabilize or if deeper troubles await. Florida's rental market is undergoing a massive shift. After years of skyrocketing rents, landlords are now struggling with falling prices, rising costs, and growing vacancies. While tenants are benefiting from better deals, many landlords are facing defaults, foreclosures, and financial ruin. If trends continue, Florida could see a wave of distressed property sales, reshaping the housing market. For renters, now is the time to negotiate. For landlords, survival means adapting. And for investors, opportunities may emerge as prices drop. The big question now, will this downturn stabilize, or is Florida's rental market heading for a deeper collapse? What do you think? Comment below. Like and subscribe to keep updated.